All right, welcome back, everybody. This is Ken Dunn, and we're here on the No Money Real Estate Podcast. I am super excited today. You guys know that my whole mission in life is to help everybody to understand all of the possibilities. And little segue here, the possibilities are infinite. I'm going to be joined on the show today by my buddy Darren Mitchell, all the way from the East Coast of Canada. He's Canada's top expert on self-banking. We're going to get started right after this. Hey, my name's Ken Dunn, and I'm a real estate investor. I want to welcome you to the No Money Real Estate Podcast. On this show, I'm going to interview elite-level real estate investors from all over North America, and I'm going to help you to see one thing that all successful real estate investors have in common. They built their portfolios without using a dime of their own money. I've got a portfolio of $300 million in real estate. That includes resorts, apartment buildings, commercial buildings, and I've built the entire portfolio without using a dime of my own money. Real estate is a business that anybody can get into, but the strategies that those titan real estate investors use to build massive portfolios have been kept secret for decades. Now, because of this show, I'm going to reveal them to you. So let's get started. Okay, welcome back, everybody. Darren, good to see you, brother.
How you doing, Ken?
I'm doing fantastic. I love technology. I love being able to sit here and have this conversation with you. But we're going to have people watching this on YouTube as well as on audio. So I want to jump right into this. You have this amazing reputation right across this freaking country. And it revolves around this idea of self-banking. And what I love about your story, and I'm going to ask you just to jump into a bit of the background right now, is this was a discovery you made in your own real estate journey. So give us a little of the background. Who's Darren Mitchell?
Yeah, so, did the traditional stuff, went to university and graduated in the 90s during a recession and tough to find a job coming out with my MBA. And I went for an interview with an insurance company for practice. And, 30 years later, still in the insurance industry. But for years, I went on to get my mutual fund license and did all that traditional financial planning. But for me, the real game changer, Ken, was 2008, the stock market crash. Fishing and with my good buddy of mine up in Alaska, we're salmon fishing, life's good. And all of a sudden, the market started crashing. And every hour I'd borrow his truck, drive to the top of the hill, hold my old BlackBerry up, try to get a couple bars to call the office and go, "What's going on?" And it just hit me that I wasn't in control of my money and I wasn't in control of my clients' money. And I was in my 30s. I had lots of time to bounce back, but a lot of clients didn't. Yes. And that's when I said, I will never be like this ever again. And I really went on a 2 or 3 year education cruise or crusade. And I said, all right, the rich people didn't suffer during the 2008 crash. What do rich people do differently that I can help my clients so the next time it happens, I can be better prepared? And that's really how Control and Compound evolved. And where we are today is I started studying the wealthy and I started paying for my own education because I know you have a financial services background. And if you want to get biased advice from a bank, an insurance company, a mutual fund company, they'll buy you lunch, entertain you, do all kinds of stuff. But when you actually start paying for these, accountant level courses, that's really where my business completely changed.
Yeah. All right. So let's talk about infinite banking. What does this mean? Infinite banking, be your own bank. I don't think many Canadians are really going to understand this. And of course, the things they don't understand and their banker didn't tell them, they're going to be skeptical about. So let's get rid of this skepticism here, now, and forever. What the heck does being your own bank actually mean?
Yeah. So I believe there's 3 ways to be wealthy in the world. If you study every wealthy person that I've ever met, and we have all our wealth coaches sit down and we go, how did these people become wealthy? And there's really one of 3 ways. You invest in yourself. You're the greatest investment you're ever going to make. Make yourself better. Join a real estate group. Get a coach. Take an advanced degree in something if the degree is useful. So invest in yourself, invest in a business, and invest in real estate. So that's where we think you should be going. And that's why we deal with business owners, real estate investors, and high net worth clients. But we really think that's step 2. And step 1 is, where do you save your money? So where do you store the wealth you have now? Where do you save the money? And for us, that's got to be a position of control. If you're looking to do a real estate deal in 2 years from now, you can't put your money in the stock market and have it drop 40% when you're ready to go pull the trigger. So we put the base of our financial plan is this infinite banking or high cash value life insurance. And it's basically a uniquely structured life insurance contract where we focus on the cash, not the death benefit. So instead of saving in the bank or saving in an RSP, you save in your cash value life insurance and you build up some cash there. But then we act like a bank. And what do banks do? Well, banks are able to multiply money. So
Yeah.
once we build up that base, we can actually go to the insurance company and say, hey, listen, I've got 100 grand in there or whatever your number is. I want to leave that. I want that to grow tax free for the next till the day I die. I want to spend that tax free in my retirement, but I'm going to use that as collateral. Would you please give me a loan so I can go do a real estate deal, invest in hay bay? And the insurance companies that we deal with, the way we have it structured, contractually, they will give you 90% of your cash value as a loan, no questions asked. And when I say no questions asked, they might ask you, do you want a check or do you want to deposit it in your bank account? That's the only question they're going to ask you. So you have your money in the policy still compounding tax-free that you can use in retirement for a tax-free retirement. You have your money in the real estate deal or a business opportunity, and you have this death benefit, right? It still is life insurance. So we've got our money in three places at the same time. And there's all kinds of, details to it. But that's the premise is if you want to be rich, invest in yourself, business, real estate. But step one is where do you store the money? And there's not a better place to store your money than properly structured cash value life insurance.
Okay, let me make sure I understand this because I thought I knew what this was and my mind just got blown. So I can put $1 million into this policy, which is capital I put into it up front. Because I'm putting that $1 million in, it literally compounds the life insurance that they're able to give me against that $1 million. But then I can go and they will lend me back using that million as the collateral, $900,000 that I can use of their money to do my real estate projects.
Yeah, absolutely. Now you got to put it in over a period of time. You can't do a one-time lump sum, but yeah, over a period of time, say you put $1 million in, well, that cash value, year one, you'd start a little underwater, but long-term, that's going to grow tax-free because we have beautiful tax laws in Canada that
totally.
Insurance grows tax-free. So that's going to grow somewhere between 4 and 6% tax-free long-term. But whatever that cash value is, if it's $1 million in the early years or it's $2 million in the later years, 90% of that they will loan you, no questions asked. But here's the best part. The loan's tax deductible if you use it for investment purposes.
Yeah, totally.
Okay. The loan's not callable. So if we have another 2008 or COVID or tenant stop paying rent, they can't call the loan. But my favorite thing for real estate investors and business owners is it's unstructured. So you pay that loan back when you want, how you want, and if you want, because you're the banker. The only one's permission you need is the guy in the mirror.
What kind of interest rates are they charging you on the loan?
Yeah, the interest rates now they're up now for 17 years. It was 4.45 for a couple of the companies we were using. Now with the increase in interest rates, it's somewhere between 6.5 and 9 point something, depending upon the company. And those will come down as interest rates come down. But again, tax deductible. So if you're going to make 15, 20, 25, 30% in a business or real estate deal,
totally.
that is the place.
But there's another piece to this too, brother. When I'm borrowing money to do deals, which like 80% of the funds that I raise is borrowed funds, I'm paying 15 to 17% for a second mortgage right now. So I can get cheaper funds by leveraging this myself. Cheaper funds means more deals.
Absolutely.
That's crazy.
Yeah. So I'll give you an example. So I bought when you go to take a loan from a cash value life insurance policy, again, properly structured, if you're dealing with someone that knows what they're doing, that loan's not going to show up on a credit report and the banks aren't going to consider it a loan for borrowing capacity. So I bought a fourplex in Cornwall a couple years ago and it was a great deal. It was $375. It was 2 duplexes actually. And you like the story. It was all about the lift. So It was 2 duplexes on one property, which was a little tough for some people because it was one property with 2 buildings on it, tough to finance. But so I call up, I always try to brainwash my children. So I asked my kids at the time, hey, can I access money for my RSPs for that? No, Dad, that RSP money's in jail. What about your RESPs? No, that money's in jail. And I said, what about this beautiful cash value life insurance policy? They said yes. And I said, well, let's leave that there. Called up the insurance company, said, hey, can I have 80 grand for a down payment on this? They said, sure, no questions asked. I went to the bank, one of the big 5, and I said, now I'm a little little experienced in this, so I went in with an attitude, and he's like, "Where'd you get the down payment?" And I'm like, "I borrowed from my cash value." He's like, "Why are you being an idiot, Darren? Like, I know you always do this, but I just like to put it in their face." Now, I wouldn't recommend everyone doing that, but they didn't consider that a loan, so they gave me a mortgage for $300,000. So I financed 100% of the deal.
Wow.
100% of the deal. What we did is we did a lift. We went to the city or the town and we said, "Can we separate these duplexes into two separate pieces of property?" We had to put a sewer pipe in, cost us like 12, 15 grand, separate sewer pipes from the road. Well, those now are worth about 320 each. So now we go back, we refinance the deal, pay off the insurance company's $80,000 loan, rinse and repeat. And by doing that with none of my own money, at the exact same time, whether I took that loan or not, my cash value life insurance was compounding the exact same tax-free way, because
Wow.
it compounds the exact same whether you have a loan or not. And idea is down the road, hopefully I'm going to have lots of these properties and lots of businesses. I've got going to have this massive death benefit down the road that is going to allow me to spend money differently and make sure all this stays in the family.
Okay, so tell me the difference, this cash value life insurance versus a standard term policy. So, and I'll give you a real life example. In full disclosure, I have a 20-year term policy that I pay $450 a month for. It gives me death benefits of $2 million. How is what you're talking about different in terms of the benefits at the end of the road and all of that stuff? Now, the other side of this, there's one part I do understand is I'm not putting a bunch of money into this up front. I'm just paying the payments every month, the $450.
Yeah.
How is this different than that? And how's this better than that?
Yeah. So you've got term insurance. It's completely apples and oranges, right? It's like comparing term insurance to a TFSA. Like those are just two separate animals. So the focus on term insurance is death benefit, right? 100% death benefit. There's zero cash value. You know, I used to have term insurance and I still think term insurance is great. Once you have enough infinite banking policies or cash value life insurance policies, your death benefit gets to a point I was able to stop my term insurance. But term insurance you buy for death benefit, it's a perfect thing for real estate investors and business owners. We encourage people to do that. This is really about where do I save or store the wealth I have now? And we're focused on the second component of a life insurance contract, which is the cash. So we're trying to actually drive the death benefit down on a policy, high cash value life policy, the death benefit as small as possible. So we have the smallest insurance cost and the maximum cash value. So there's two components to a life insurance contract, cash value, death benefit. For a term, zero emphasis on cash. So you have a zero cash value, big term. But after 20 years, it blows up and most people cancel after 20 years. The participating whole life is going to be there forever with an increasing death benefit forever and an increasing cash value forever. But it's not going to be $435 a year, right? You're going to have to fund that. And people's, typical $20,000, $25,000 a year, up to $1 million a year going into these for some people. It's how much money do you want to save? I call it my opportunity fund, and I want to take advantage of big opportunities like the Hay Bay Resort. So I put a lot of money into this because there's no fear of putting money in this because I'm just going to be able to multiply it to do more deals.
That's brilliant.
It's like putting money in your bank account. No one has a problem putting $100,000 in a checking account because they know they can access it. I have no problem putting $100,000 in a cash value life insurance policy because if I see an opportunity or I need to make payroll next quarter, I can leverage that and have an unstructured loan, do both deals, multiply my money.
Yeah, no, it's freaking brilliant. So the money you put in stays there and you make 5-6% a year, but they're going to give you 90% of that at a reasonable interest rate, a better interest rate you can. I never thought about that. It's a freaking great way because that the bank doesn't look at that as debt is what, if I heard you say that right. So I could go take 250 grand out of my, whatever you called that, use that to do the down payment on $1 million property, go back in there, lift the value, turn it into a $2 million property, go get a new first mortgage for $1 million, pay back my insurance, pay back the original loan, and I'm off to the races.
Yeah. And if anything goes sideways and you need another 6 months, you're not going back to the private lender saying, listen, is it okay if we extend that? Because you just look at the guy in the mirror and say, if I have a loan that I'm like, I did a private lend last year, a developer wanted to borrow 100 or 2 years ago. At the time, interest rates were about 5%. 100 grand at 15%. I didn't touch my own money. called the insurance company, said, hey, can I have 100 grand? They said, sure. Gave it to the developer. Year later, he gives me a check for 115. I give the insurance company 105. I pocket the 10. That was what we call an and asset. I'm doing this and that. Every other asset you have is an or asset. Do I do real estate or business or TFSA or this? Well, this is an and asset. I do the cash value life insurance and whatever great opportunity comes along.
And you've been doing this for a while. What kind of stories do you have? Did anybody come to your mind that you've got a really good client that's done this, that did something pretty neat in real estate using this strategy?
Yeah, well, not just real estate. Like we have farmers that use this, right? Like they'll sell their cattle at the in the fall, fund the policy, grow their cash value, and then in the spring they'll start borrowing against their policy to fund the new crops or the new animals, and then the feed all summer, and they rotate it. We've got a ton of private lenders that do this. We got a ton of land developers. For that Hay Bay Resort, I know we've got some common clients there in the Hay Bay Resort.
Yep.
And that's a simple one. So, if you want to put 100,000 in one of your projects, you call up the insurance company, you say, hey, want to borrow 100 grand? The expectation, we're going to get that money back in a year or year and a bit. So no payments. I don't make any interest payments on that. And then in a year, when I get the money back, pay off that loan. And that cost me, say 7% less tax, $3,500 to basically double my money in a year. And if you find a project like one of yours,
that's
so we've got probably 80 or 85% of our clients are real estate investors, and the rest would be business owners. But a lot of those business owners are also real estate investors. The other one we see it a lot is business owners sitting on cash, right? You get business owners, they're sitting on hundreds of thousands of dollars of cash because they don't know what next quarter, next year is going to bring. Yeah. So you get a lot of business owners that say, well, why don't I put this in my own bank? And you put it in there. And then if the opportunity or the emergency comes along, right? What if things go sideways? I'll tell you one cool one. So I was down in Florida at a conference years ago, and it was an accountant giving a presentation. And he was talking about the 2008 recession, how he had all business owner clients. And he goes, every one of my clients that had access to money in 2008 became really wealthy. And he talked about this guy with a $2 million cash value life insurance policy. He borrowed $1 million in change, and he bought 13 additional businesses for 30 cents on the dollar. So he went and bought it was a franchise, and he bought 13 more because everyone was panicking and didn't have money. Fire sales, right? What happens? Deal of a lifetime. Somebody needs money. Someone has money. Yep. Well, this guy had money. So he bought 13 businesses, and he goes, he 10x'd his wealth in 4 years. So some smart ass raises his hand and goes, what was the interest rate on that loan? And he's like, who cares? He 10x'd his money because he had access to cash. And that's why business owners and real estate investors love this, because banks are all happy to give you money when you don't need it. But when you really need it, or you have a real good opportunity or a real bad emergency, that's where this is just guaranteed loan, no questions asked.
Can I put that insurance policy in a corporation name, or does it have to be my personal name?
Oh, yeah. You're getting me excited now. Yeah. So we absolutely can do this in a corporation. So I've got 9 of these policies. I think 4 of them are inside my corporation. So really it's where the money is. But I mean, if you take a small business, the first 500,000, you're paying 11-12% tax on that. We call those 88-cent dollars. Now, those 88-cent dollars are sexy until you go to invest them, and you're going to pay upwards of 50% tax on the growth. You're going to pay tax to get the money out, and you're going to pay tax when you die. Well, if we put this inside the corporation, we can use those 88-cent dollars, grow your money tax-free, access the loans tax-free, and then when you die, the death benefit will flow through the company completely tax-free to the surviving shareholders. So from a real estate perspective, Ken, if you've got millions of dollars of death benefit long-term, well, now as a real estate investor, I'm like, I'm going to refinance the crap out of my real estate portfolio or even my personal residence in my 70s and 80s, because who cares if I die with a big debt if there's X million coming through. So it's that freedom or permission slip, I call it, to spend your other money differently. So there's huge corporate benefits for this.
So let's say I put
$1
million into one of these policies through my corporation. Can I name myself as the death beneficiary?
Well, you'd be dead.
Yeah, I know. Or can I name my wife as the death beneficiary so she gets the money, even though it was even though it was the company that put the money in?
Yeah. So we got something in Canada called the capital dividend account. So I'll walk you through my example, right? So I buy it in my company. If I die, let's say it's $1 million, the $1 million flows tax-free to the company, okay? And then that $1 million, depending upon when you die, we're just going to say for now, it's either 90 or 100%, depending when you die. We're going to say 100% of that million flows out to the surviving shareholder. So let's say my family, my wife or my kids inherit my shares at my death. So let's just say wife to keep it simple. Now my wife selects this capital dividend, and that $1 million that was paid tax-free to the corporation flows out tax-free to that shareholder. If you have partners, there are special classes you can set up. We get a little complicated, but that's the really thing. Whoever owns the shares of the company when you die, that person gets the death benefit. And again, we're not talking RSP where we're kicking the tax can down the road, where there's a day of reckoning coming, right? Where you're paying 53% tax at death on your RSPs. This money, we're paying that corporately, that small bit of corporate tax, and then we're not paying tax on the growth, not paying tax on the loans, and not paying tax on the death benefit.
Bro, I could keep asking questions forever. We need to bring this to an end. Tell me about these books, Infinite Banking and Be the Bank. I know that if people are listening to what you're saying right now, they're going to want those books. How do we get those books?
Yeah, so both these books are available on Amazon. Be the Bank, just Google Be the Bank on Amazon, and that's available. And then Infinite Banking for Real Estate Investors. If you're going to buy one, I'd suggest starting with Be the Bank. Kind of lays out the principles of what the concept is. And then you can check out controllandcompound.com. We've got free webinars on there. We've got a podcast, Control and Compound, with Darren Mitchell. We've got all kinds of social media at Control and Compound. And we get a special thing offering for your listeners.
That's what I was about to tell you about. Like this show, I guarantee you, I've got a really good feel for what goes viral on our channels. And we get some podcast episodes that get tens of thousands of views on YouTube and hundreds of thousands of downloads. This is going to be one of them. So is there anything, like I know some of my friends have a lot of money, and when they hear this and understand the questions I just asked you, they're going to want to talk to you. How do I get my friends in touch with you?
Yes. So we got a special link, controllandcompound.com/Ken Dunn. So if you go there, we're going to give you VIP treatment or front of the line treatment. So what that'll do is automatically qualify your listeners not to go through the application process to see if we're going to meet with you or not. We're going to meet with the Ken Dunn listeners automatically with one of our wealth coaches, and that involves an hour or so on a Zoom call. We call it an education session. We're not selling you anything on that. We're just explaining the concept to you. So that's what we are. We're financial educators. We educate you on the topic. If you want to do it, great. If you don't want to do it, great. But we got people lined up to see us, but Ken Dunn listeners get front of the line treatment.
Yeah, so if there's anybody here that wants to ask Darren some more questions or ask his team some more questions, just go ahead and click on that link, controllandcompound.com/Ken Dunn. We'll put it in the show's notes so you've got it there. Darren, give me one last piece of advice for the newest real estate investors that are going to watch this show.
Well, as much as I'd like to say, save your money into cash value life insurance, if I was to talk to a new real estate investor, I would say join a real estate investing group. Joining a real estate investing group changed my life. I wish I had started investing in real estate in my 20s, but I wasn't in that environment. And once I joined a real estate investing group, and now many real estate investing groups and masterminds and the whole bit, just being around those people was the best thing I could do. And educate yourself, right? You are the best investment you can make is you. And if you can't afford to join a real estate investing group now, my books are 99 cents for the Kindle version, right? $10 for a paperback.
Yep.
There's YouTube that's free. Your podcast is free. Educate yourself as much as possible. And then when you have the means, join a real estate investing group.
Friends, this stuff is freaking crazy. I'm Ken Dunn. This is the No Money Real Estate Podcast. If you got geeked out by what we talked about today, go to controllandcompound.com/Ken Dunn. Get on the phone with his team and get your questions answered. And listen, if you want me to keep bringing more guests like Darren Mitchell to the show, you've got to show the love. Subscribe to the channel. Subscribe to the podcast. Leave us a review. Let's get this podcast out to the world.